How to trade on the stock market using Questrade and CIBC's Investor's Edge. So anyone who watched my previous video, I showed you that I own some Teva stocks, and I bought it at here. Let's look at the executions. I had initially bought some at 16, and I had given a stock tip actually to buy Teva under 17. I had bought some at 16, and then it dropped to 14. So I bought some more at 14, which averaged out at around 15. And then it dropped even more to under 12. I should have bought some, but I didn't. I was waiting for it to drop even more, maybe to 11 and 10. But then it started going up. So like I mentioned, it's always, you're never going to be able to buy at the lowest point possible. You can only make an estimated guess or a calculated guess. You can be close, but you can never be at the lowest point. So yeah, so I bought some at 16, and then I rebought at 14, which averaged out at 15. And then I waited a few, let's see how much time it took actually. So the last time I bought some Teva stock was October 24th, and I sold them at 18.25 December 14. So not even 2 months. So in 2 months I was able to make, let's see how much return that is. So 18.25 divided by 15. That's 20%, 21% in 2 months. Which my goal is actually 10 to 20% per year. So this is a pretty happy with this trade, where I made 20% in 2 months. And I also collected some dividends. In terms of dollars, we could see how much that gave me. So I had 138 shares, and I sold at 18.25 minus 15.07, $3.18 per stock, and I had 138. So that's a profit of $438 in 2 months from one stock, which is about 21%. So yeah, and here's your proof. Here's the execution: 75 at 16, September 25th, 63 stocks at 14, October 24th, and I sold everything at 18.25, 138 shares, December 14th. And you could also see what my balance was in my last video, and you can see right now that my balance went up to 2,535. So if I just keep doing that, repeating profitable trades year long, at the end of the year, my money will grow, and it'll grow way faster than if it was in a savings account. And I do this from home without having to leave. So I do this from the comfort of my own bedroom, or even on the couch. So it's a pretty good way to grow your money. And you have to find ways to grow your money, or else your money loses value. Your money loses value year by year because of inflation. The things that you can buy with your money becomes more and more expensive. So that means your same amount of money, your same dollar does less. So if your money does less in the future, then you're losing value. So that's why your money has to grow past inflation. It has to grow more than inflation. Inflation is usually between 1% and 4% per year. So that's why I try to aim for 10 to 20% return on my savings per year. I bought Teva Pharmaceuticals. It was Enbridge, which I bought at around 50, and some more at 49, and some more at 48.75. It went down to 44. I should have bought some more, but I didn't. But it went back up. It went back up to 50, and even above 50. And now it came back down to 49. But it's the same idea. Just I didn't buy the lowest point possible. In my mind, in my opinion, it was the lowest point or close to it, but it wasn't. But I still, it just means I have to wait longer because I didn't buy it at the lowest point. I'll have to wait longer before I sell. So that's it. So I just have to wait longer before I sell my shares in Enbridge. And if it goes lower again, I'll buy some more. So here we can see what I own. Let's look at my TFSA. So I have some Synovus Energy. This I bought at 15. It's right now it's trading at 11. It came all the way up to 14.50, but I didn't sell, and then it dropped again to 11. If it drops low, if it drops below 10, I'm gonna buy some more, but I'm still waiting for it to go back up. Common Real Estate bought it at 14. I will probably sell it at 14.50. I've been collecting dividends from this stock every month. There's my Enbridge holding, 40, which is right now at 49.14. I believe I bought this one at 50. And Hudson Bay, which I bought at 13.70, I think, and right now it's at 10.61. Still waiting on it, but I'll post a link with the video where I show all my profitable trades. And you could see that I was able to make many profitable trades in the last 12 months. And these are just stocks I'm waiting for to go back up. Actually, Common it's profitable, but I'm gonna sell it at 14.50. If it drops below 13, I might buy some more. And while I'm holding these stocks, I'm collecting dividends. Here, let me show you the dividends. The transaction history. Let's go for last 6 months. So yeah, collecting December 15, collected $9.50 from Common. December 1st from Enbridge, $23. Common again, November 15, $9. October 16, Common every month, $9. So yeah, that's why I try to pick stocks that pay out dividends, so that in case I have to wait longer than expected for the stock to go back up, well, while I'm waiting, I'm collecting dividends. I'm collecting something while I'm waiting, and then when it goes back up, I sell. I make a capital gain. So some stocks I would suggest, or that I'm waiting for, or that I've placed orders on. I'm looking at this stock here, Bed Bath and Beyond, dropped hard, went all the way down to 21. It's going back up. I think below 20. If it goes below 20, I might buy some. So that's why I look at companies that I don't think are going to disappear. Big companies with big market caps, and I just wait for the stock to drop for whatever reason. I buy some and then wait for it to go back up. That's it. It's really that simple. But you really have to choose the right companies to begin with for that strategy to work. Even though big companies do disappear or go bankrupt, but if you use the strategy of not putting all your money in one place, and most of your trades will be profitable. Even if you have one that goes bad, your profitable trades will compensate for that one that goes bad. But if you stick with big companies, then you're decreasing your chances of risk. And a good way to filter on good companies is to look at what Warren Buffett owns, or what Berkshire Hathaway owns, which is public information that you can Google, and you can see which stocks he owns, and you could just put them in your portfolio and just watch them. Keep an eye on them every day. Whenever one of these stocks drops dramatically or is at a low point in your opinion, buy some stocks, buy some shares. So yeah, so what I'm following right now is Bed Bath and Beyond. If it drops below 20, I'm gonna buy some. New York Mortgage Trust. If it drops below 6, I'm gonna buy some. Uh, Bank of Nova Scotia also. I think I put an order at 75. General Electric also I'm watching. Laurentian Bank also I'm watching. Yeah, so I'm looking for things to buy, but I'm waiting for them to drop. So I have to be patient. I can't just because I want to participate or buy something, I can't just be impatient or have quick fingers and just buy something just to participate. That's not a good idea, because then I won't be making profitable trades. Because my trades usually I aim to make 7% per trade, but I try to repeat those profitable trades, which allow me to reach my 20% per year. Sometimes in one trade I'll make 20%, but it won't be with all my portfolio. It'll be with a portion, since I don't put everything in one stock. But if I could repeat 20% every time, that would be amazing. So let's look at my US holdings in my TFSA. So these are profitable. Oh, I'm looking at my dividends, sorry. So yeah, these are profitable actually at 83, 97, 84. I bought this at 81, so it's actually profitable. And this I bought at 6. So I'm actually profitable. It's just that it shows you're negative because the US dollar dropped since I bought them. So because I bought them with Canadian money, and I think when I bought them, the US was at 138 compared to the Canadian dollar. Right now it's at 128 or 129. So that's what it's making me lose money on these stocks if I sell them and convert. But if I sell and keep it in US, then it's not a loss for me. But I have to wait for the US dollar to go back up so that I can convert back to Canadian. Or I could just leave it in US and keep trading in US. But in terms of stock price and stock choice, these are both profitable. So this I bought at 81, it's at 84 now. And this I bought at 6, it's at 623, but it's paying me more than 10% per year in dividends. So I might just hold on to it and collect dividends. And if it drops below 6, I'm gonna buy some more. And in my RESP, which is something that every parent should have in Canada if you have a child. I guess by definition a parent means you have children, right? Yeah. So this is, in my RESP I have Enbridge, which I bought at 48.75, so it's slightly profitable, but I collected dividends also. I think I collected $31 from this stock since I purchased. So yeah, so that's my investor's edge. And if you have any questions, just leave them in the comments, and I'll gladly make a video about it or answer them.